Hello and welcome back to the Sovereign FX YouTube channel. So today we're gonna go over the best time frames to execute your trades. So here with me I have the 15-minute chart, and according to me and the experience I've gathered throughout the years, the best the best time frame to execute your trades in is the 30-minute time frame, because it's an intermediate between the 5-minute, 15-minute, the hourly and the 4-hourly. Okay, so that's the best execution time frame. With that, let me now break down how you can use all time frames to serve you in your trading, and how you can look at the biases at the higher time frame so that you can come down to the 30-minute and execute accurately. Because a lot of traders may know the bias, know the direction, but once you fail at execution, you're not good at trading, right? I know a lot of you during their trading, maybe they plotted out where price would go, but they took a wrong execution, got stopped out, and at the end of the day, price actually went to the zones they had marked out. So first things first, when I come to the markets, okay, it's not necessary, but I like looking at the weekly. This is just to see overall market bias, and as you can see, price is currently in a downtrend. Price is mirroring what happened here. As you know, history repeats itself, and that's why I'm saying this price is mirroring what's going on here. Okay, so now we know gold is in a bearish trend. Come down to the daily. It helps you realize whether you're at the daily key levels, whether you should execute there or wait for maybe the top week of the daily, so that you can execute as it comes down. Because as you can see, 90%, 95% in fact, of candles have bottom and top wicks. So in the daily, when the daily starts, you don't want to execute a trade in the Asian if it hasn't made its top wick. And how does it confirm we are in a downtrend? If it makes its top wick does not break the top wick of the previous candle, this serves the sell bias, so you could execute on the flip of this daily candle. Okay, so the daily is just to help you know where your executions are at. And the 4 hours, here's how I determine my session bias. And the previous videos I've talked about session bias. Okay, higher time frames might be bearish, but during the session you're trading, price might give you bullish price action. And as we are traders, we have to be fluid in the market. You don't want to stick to one bias and be rigid, because you'll end up forcing a trade in the opposite direction. Okay, so this is how I just find out my session bias. So there's an indicator that helps me plot out sessions on chart. Okay, so here we have our sessions on the chart. Let me edit this a little bit. You can copy my settings if you find them appealing. So I don't need the Tokyo session, I only need the London and New York session. Okay, so here's what I do. Price is bearish, and the last 4-hour candle is bearish. It broke the previous 4-hour candle top wick and also broke the previous bottom wick. What does this tell you? This is a volatile candle, so you're expecting volume to come in. This was during pre-London, and as London opens, you're expecting a lot of volume for continuation to the downside. So you just have that in the back of your mind during the London session. The London session is highlighted in green. This 1 4-hour candle is the London session candle. So you drop down to the hourly. Okay, so hourly also helps you execute, but I don't find it appealing waiting for an hour for a candle to close, because I should have executed this trade above, maybe from here, and rode this full move to the downside. But with an hour candle, you'll have to wait for 1 hour, and you can realize this already happened before you could execute, and that's why 30 minutes is the sweet spot. Okay, so this is how, in fact, we took this trade with the group today, and this is how I would, not how I would, but how I tackled this trade. So here I had my zones, horizontal line cutting across here, and just by a glance, if you've been following the videos in the channel, you can know what type of trade this is. Here we have the resistance. Here we have our resistance. As I was saying, price made a low. You expect it to pull back, retest the low. This happens 80% of the time, and you're in these markets for the 80% probability. So this is a fake out. Okay, and this is how I showed members, maybe not members, anyone who watches the YouTube channel, how we should execute on fake outs. So this is how we execute. So here we have our range one. Okay, sorry for this. This is a fake out. Price closed above, then closed below. For me to consider buys, I'd want it to break this zone. This was our next zone. So knowing price is bearish for this session, the only way I would have changed my bias to buys is if price closed above the range 2. So this is range 1, range 2. And this is how we catch fake outs. So price closed above range 1, then closed below. This is the perfect, picture perfect setup for a fake out. So you execute immediately. The candle opens, having your stops above here, and wanting it to fill this range to retest the bottom of the range. So the range bottom is formed by the price pulling down, a pullback, then retest. Okay, so here we were able to milk around 30 pips and left runners and stops at break even. So I currently have a trade open. Price came down to 100 pips, but I couldn't close because that isn't within my strategy. So right now I'm floating at around 54 pips. If you have any question, make sure you leave it in the comment section below. But I think this is the best way you could attack the markets. You could also drop down to the 15, but the 15-minute confirmation are weaker confirmation as compared to what's going on in the 30-minute. The 15-minute can help you catch retests, maybe small scalps. You could have caught some small scalps here to the upside as you wait for its reaction in this key level. Going to the 5-minute, this is noisier. This is more noisier. And as you can see, the market structure is changing here. Like, there's a lot of noise. You can't catch clean trades in the 5-minute. So the smallest time frame you should go down to is the 15 minutes, and the best time frame is the 30 minutes. So with that, I come to the end of this video. If you learned something, make sure you drop a like, subscribe. You can follow me on Instagram, join our groups. Whatever floats your boat, drips your chain. See you next time.